You're listening to Money Matters with Gary Goldberg on the Business Talk Radio Network.
I am very pleased to welcome Jeffrey Lewis, who is a Senior Managing Director at Guggenheim Partners in New York and the Chairman of the Board of the Generation Mortgage Company. And he has a knowledge about Fannie Mae and Freddie Mac that is particularly important for us to discuss this morning. Jeff, welcome to Money Matters.
Gary, good morning. How are you today?
Good morning to you. And first of all, can you tell my audience what the role of Fannie Mae and Freddie Mac is? Because many people don't know and don't particularly care, except they know that they were part of the problem years ago if you read the newspapers.
Well, they were really an instrument of government policy, and the government policy was to encourage home ownership as a matter of national importance. So what Fannie Mae and Freddie Mac did was both guarantee loans that would be purchased by other investors, as well as act as an investor and purchase loans themselves for their own portfolio.
Jeff, were they also part of the ninja problem, no income, no job, no assets, and they made loans? Was that part of the accusation that is being put towards them now?
Well, they were certainly part of the overall problem of decline in standards that was applied to borrowers as we kind of inched lower and lower in our credit standards in the housing market.
Why would they have permitted that? Why would they have permitted that to go on, Jeff? In just a quick summarization, why did they allow for more substandard loans to occur? Because they're being accused, particularly by Barney Frank. He says, get rid of them.
Well, you have to remember that that the policy was to try to enable people to own homes, and so if that, rightly or wrongly, what that led to is loosening the standards that enable people to borrow the money. If we wanted to have big down payments and conservative loan-to-value ratios, and have people not doing option arms and other exotic mortgage products and sticking to 30-year fixed-rate mortgages, like generation that we deal with in the reverse industry did when they were saving for themselves. If that's all we wanted people to have, then a lot fewer people would have been able to own homes.
Well, you have a particular expertise in the reverse area, and I want to get to that, because if Fannie Mae and Freddie Mac are dissolved or restructured, what impact could this have on people who have reverse mortgages?
Well, for a period of time, Fannie Mae was the dominant investor in the reverse mortgage market. But at this point, we actually have a pretty vibrant secondary market away from Fannie Mae, as all of our loans are FHA insured. So they go into Ginnie Mae securities, full faith and credit of the U.S. government, guaranteed securities. And there's a wide variety of investors that are purchasing them now. There was a period where Fannie Mae was completely dominant, and we've managed to move away from that. And I think that our experience in the reverse space can be instructive for the rest of the market as they look to move away from that dominance of Fannie and Freddie.
Do you think they should be done away with or restructured? And I have a sense you're going to say restructured, but in the event you say that, what would you like to see that would be different from what they did before?
Well, I think before we talk about what the entities are that we are using to carry out our policies, we have to decide really what our policies are. We have a situation, right now where the Fed has bought over $1 trillion of mortgage-backed securities in the last, say, 14, 15 months.
Does that hurt or harm? Does that hurt or help the average listening person? Because
it has been done precisely to help the average listening person. I'm not a psychic, and I can't tell you exactly how much lower mortgage rates are than they would otherwise be, but they are certainly considerably lower than they would otherwise be. The government purchased a majority of the mortgages that were produced in this period, and about 80% of the conventional loans that were produced in this period. So you can imagine that kind of dominance in terms of the investing that's been going on by the federal government, and this is without Fannie and Freddie, this is just the Fed, that sort of dominance has certainly had an impact and has lowered rates beyond where they would be. I think one of the great concerns that many people have about the housing market today is what happens when the federal government steps back from these purchases.
Right. It's artificially being, let's use the word manipulated, in order to keep the housing market from absolutely, totally being destroyed. So,
well, that manipulated has a negative connotation, but I don't think, government policy manipulates everything. So when the government decides to act and put incentives into place or spend money to make things happen, they're manipulating the marketplace, and it's something that they do in this area, and they do it in a lot of other areas too.
Now, when you hear Barney Frank say, let's get rid of it, what's your reaction at your organization? Because I'm sure it would have an impact that would concern you.
Well, as I said, our marketplace has been able to move sort of in a fashion that was not in any way troublesome, away from Fannie Mae as really our sole investor to a broader base of investors. So for our market, I think we can foresee a day without these entities. Certainly our market and the rest of the housing market would have a lot of trouble dealing with a world without the guarantees. There are two really distinct roles played by the federal government throughout the housing finance system. One is the guarantee of loans that are purchased by third-party investors, and the other is the outright purchase of loans themselves. And I think many people have been concerned for a long time why it was really necessary for the government to purchase loans, to be an investor, when the U.S. capital markets are broad and deep enough that they could certainly handle the purchase of these assets.
Jeff, if somebody wants to, we're out of time, unfortunately, but if somebody wants to learn more about Generation Mortgage and this whole subject, is there a website that they can go to?
Yes, we're at generationmortgage.com, and we certainly welcome people to come and have a look at the website. A lot of great information, especially about the FHA reverse mortgage products.
Okay. Thank you very much, Jeff Lewis. I appreciate your appearance here on Money Matters.